What if the car you're driving right now was built by a company that won't exist in 2 years? And what if I told you the biggest reason these automotive giants are collapsing isn't what the media reports, it's because they've been lying to you about maintenance for decades? Right now, in 2025, 10 major car brands are hemorrhaging cash, facing bankruptcy, or already filing Chapter 11. Some have burned through billions, others are begging for government bailouts. But here's what nobody's discussing. The same corporate decisions destroying these companies have cost you thousands in unnecessary repairs, premature failures, and outright dangerous mechanical problems. I'm going to expose the 10 brands circling the drain, the real reasons they got here, and most importantly, the specific maintenance deceptions they've sold you that connect directly to their financial collapse. We're talking $277 million in class action settlements, lifetime, fluids destroying transmissions at 80,000 miles, and engineering shortcuts made to game EPA tests that are grenading engines across America. By the end of this video, you'll know which brands to run from, which vehicles in your driveway are financial disasters waiting to happen, and the maintenance lies that could hit you with an $8,000 transmission bill. The automotive industry has been playing you for profit while driving themselves into bankruptcy through the same greed. I'm pulling back the curtain on all of it. Let's get started. Brand number 1, Nissan. The $277 million CVT disaster. Most people think Nissan's continuously variable transmissions are sealed for life and need zero maintenance. That's what's printed in owner's manuals for 2013 through 2019 Altimas, Rogues, Pathfinders, Muranos, and Maximas. But here's the dirty secret. Nissan's CVTs are catastrophically failing between 60,000 and 90,000 miles with violent, shuddering, complete power loss while driving, and total transmission death requiring $3,500 to $8,000 replacements, and Nissan knew the entire time. The proof? 4 separate class action lawsuits totaling over $280 million covering over 1 million vehicles. One owner paid $7,000 out of pocket for CVT replacement at 75,000 miles. The settlement reimbursed him $4,680, but only after months of fighting. Here's the kicker, ZF. The company that manufactures transmissions for multiple brands officially recommends transmission fluid changes every 50,000 miles. Nissan tells you sealed for life. Independent mechanics recommend CVT fluid changes every 30,000 miles at $300 per service. Advice Nissan actively discouraged. The solution, change your CVT fluid every 30,000 miles using genuine Nissan NS2 or NS3 fluid. The math over 150,000 miles, following Nissan's no-maintenance lie, costs $7,000 in replacement. Following the 30,000-mile schedule costs $1,500. You save $5,500. Bottom line, when your business model depends on hiding $7,000 failures until warranties expire, and then $280 million in lawsuits expose the fraud, customers abandon your brand forever. But if you think Nissan's CVT scandal is shocking, wait until you hear about the American brand that recalled 610,000 vehicles in 1 month for fires that start when the car is turned off. Brand number 2, Stellantis, the 610,000 vehicle recall catastrophe. You've probably been told that Jeep, Ram, and Dodge represent American toughness and reliability. Customers believed they were buying vehicles built to last. The truth is, Stellantis sales have imploded 42% from 2015 to 2024, losing 940,000 annual sales. Chrysler now ranks dead last out of 30 brands in used vehicle reliability. Here's the evidence. In September 2025 alone, Stellantis recalled 610,000 vehicles for hybrid power failures, airbag malfunctions, rollaway risks, and driver assistance system failures. NHTSA is investigating 781,000 Jeep Wranglers and Gladiators for fires occurring when the ignition is off. 194,000 plug-in hybrids were recalled for battery fire risk, with Stellantis telling owners to park vehicles outside because they might spontaneously combust. But here's what connects to your wallet. Stellantis brands use ZF 8-speed transmissions marketed as filled for life. ZF, the company that built the transmission, officially recommends fluid changes every 50,000 to 60,000 miles. Transmission failures appear at 80,000 to 120,000 miles, costing $5,000 to $8,000 to replace. The solution? Change transmission fluid at 60,000 and 120,000 miles. Cost $700 total. This prevents the $6,500 replacement. You save $5,800. Stellantis is circling bankruptcy because when your reliability ranks last and customers face 3 recall notices per vehicle, brand loyalty evaporates. And if Stellantis's recall crisis rattled you, the next luxury brand literally discontinued every gasoline model and bet everything on EVs nobody wants. Brand number 3, Jaguar, the luxury brand that cancelled itself. Most people think Jaguar competes with BMW, Mercedes, and Audi as a legitimate luxury performance brand. The beautiful styling and British heritage suggested exclusivity and engineering excellence. But here's the reality check. Jaguar sales collapsed 63% in 6 years, from 24,000 vehicles in 2018 down to 8,865 in 2024. Jaguar's sister company Land Rover sells 80,000 vehicles annually. Jaguar sells only 10% of what Land Rover achieves. Jaguar's response? They discontinued their entire gasoline lineup to go EV only by 2025, betting everything on electric vehicles during an EV market slowdown. Here's the ownership cost nightmare. A Jaguar F-Pace purchased for $55,000 depreciates 65% over 5 years, losing $35,750. Add $8,500 in reliability repairs, and your 5-year total cost is $44,250. A BMW X3 totals $31,700. The Jaguar ownership penalty is $12,550, 40% higher cost. The maintenance deception. Jaguar marketed differentials as sealed for life. Reality? Differential failures at 80,000 to 100,000 miles require $2,500 to $4,000 replacements. Differential fluid changes every 50,000 miles at $150 to $200 prevent most failures. When luxury brands cut maintenance corners, reliability collapses, resale values tank, and customers flee. But at least Jaguar tried to build something. The next brand raised $1 billion in debt, fired 15% of workers, and needed a Chinese bailout just to survive another quarter. If you're finding this information valuable, hit that like button to help other car owners discover these truths. Brand number 4, Polestar, the Swedish EV fantasy imploding in real time. You've probably heard Polestar marketed as the premium EV alternative to Tesla, luxury credentials from Volvo heritage combined with Chinese manufacturing scale. The truth is brutal. Polestar's stock collapsed 83% from its 2022 peak. They slashed workforce 15%. They raised $1 billion in debt financing, not equity. They required an emergency bailout from Geely. Volvo diluted ownership from 48% to 18%, essentially abandoning ship. Here's what the numbers reveal. Polestar 2 starts at $60,000, but customers choose Tesla Model 3 at $38,990 or Model Y at $43,990 instead. For early buyers, the disaster is financial. A Polestar 2 purchased in 2022 for $62,000 is worth approximately $28,000 in 2025. That's $34,000 in value loss, 55% depreciation in 3 years. The solution: never buy from EV startups until they've delivered 50,000 units profitably for 2 consecutive years minimum. The startup graveyard proves this. Fisker bankrupt June 2024. Lordstown bankrupt 2023. Arrival bankrupt 2023. Nikola bankrupt February 2025. When EV companies prioritize trendy design over profitable economics, bankruptcy becomes inevitable. Speaking of EV disasters, the next brand delivered promises, $24,000 price cuts, and then bankruptcy papers. Brand number 5, Fisker, from $69,000 dreams to $14,000 liquidation. Most people believed Fisker represented California EV innovation with the Ocean SUV, solar roof, sustainable materials, innovative interior design for $69,000. But here's the timeline of complete collapse. February 2024, Fisker announced insufficient capital to survive 12 months. March 2024, they slashed prices $24,000, a 35% discount. June 2024, Fisker recalled all Ocean models for software causing loss of drive power while driving. Same month, Chapter 11. Bankruptcy filed. The 3,300 vehicles produced got liquidated for $14,091 per vehicle, originally priced at $69,000. Here's the early buyer catastrophe. If you purchased at full price, you paid $69,000. Current value, $15,000 to $20,000 maximum. Total value loss, $49,000 to $54,000, 71 to 78% depreciation. Your warranty is void. Software updates? None. Parts availability? Extremely limited. The recall? Never completed. One owner posted, "My Ocean is a $70,000 paperweight. No shop will touch it. The battery shows 85% charge, but the car won't move. I can't sell it, can't fix it, can't donate it. I'm making payments on a dead car." The solution: avoid EV startups until proven profitability. Total customer wealth destruction: approximately $120 million. But at least Fisker tried affordability. The next brand sells exclusively to wealthy buyers, posted 63% sales decline, and canceled their only exciting products. Subscribe now and turn on notifications so you don't miss out on more money-saving automotive insights. Brand number 6, Alfa Romeo, the Italian dream. Dying in America, you've probably heard Alfa Romeo represents Italian passion, beautiful design, and performance heritage. The Giulia and Stelvio seem to offer European driving dynamics at competitive luxury pricing. The reality is a 63% sales collapse from 24,000 vehicles down to 8,865. BMW sells 50,000 3 Series sedans alone annually. Alfa Romeo's total sales represent only 18% of what one competitor model achieves. Consumer Reports puts Alfa Romeo in the bottom 5 brands. Their recommendation? No, based purely on reliability data. Stellantis responded by canceling the Giulia, Quadrifoglio and Stelvio Quadrifoglio, the only models enthusiasts cared about. Here's the ownership cost. An Alfa Romeo Giulia purchased for $45,000 in CARS, $6,500 in reliability repairs over 3 years, plus 55% depreciation, totaling $31,250. A BMW 330i totals $23,050. The Alfa Romeo penalty is $8,200, 36% higher. The maintenance deception. Alfa Romeo manuals specify 10,000-mile oil change intervals. Reality? Alfa engines develop carbon buildup and turbocharger-bearing wear when following 10,000-mile intervals. This causes turbocharger replacement at 70,000 miles costing $3,500 to $5,000. When brands sell fewer than 9,000 vehicles annually with bottom-tier reliability, bankruptcy becomes inevitable. And while Italian brands collapse from unreliability, the next American icon is dying because half their dealers literally quit. Brand number 7, Buick, the brand. Even dealers rejected. Most people think established GM brands like Buick will survive based on corporate backing and American market presence. But here's what happened. GM mandated Buick dealerships invest $500,000 to $1 million each in EV infrastructure and training. The shocking result? 50% of Buick dealerships chose GM buyouts rather than invest in Buick's future. Here's why dealers quit. Traditional dealer profit comes 60% from service, oil changes, brake jobs, transmission services. EV service requirements are 60% less. No oil changes, transmission services, spark plugs, timing belts. Buick EV sales projections showed insufficient volume to sustain dealers with reduced service revenue. The demographic problem: average Buick buyer age is 60+. EV adoption for 60+ runs significantly below average. Dealers concluded their customer base won't transition to EVs. The investment calculation: required cost $500,000 to $1 million. Expected sales 5 to 10 vehicles monthly. Reduced service revenue 60% less. Break-even timeline 15 to 20+ years. Rational decision: take the buyout and exit. When you force a brand with aging customers and declining sales into EV-only strategy, even your own dealers abandon ship. But GM's killing Buick through EV mandates, while the next Japanese brand is dying because they can't compete. Brand number 8, Mazda, the smallest player facing extinction. You've probably been told all Japanese brands are equally positioned for success based on reliability, reputation, and engineering quality. The truth is, Mazda sells only 400,000 vehicles annually, compared to Toyota's 2.2 million. Mazda represents only 18% of Toyota's volume. Here's why size matters. If the automotive market contracts 30% during recession, Toyota loses 660,000 units but still sells 1.54 million viable. Mazda loses 120,000, dropping to 280,000, not viable. The product gap: Mazda has no pickup truck while F-150, Silverado, and Ram dominate profits. Weak hybrid lineup while Toyota hybrids take share. No EV momentum. Sedan dependency while SUVs dominate. The maintenance warning, Mazda issued Technical Service Bulletin 09012/24, specifically warning against transmission fluid flushes. Yet many Mazda dealers still push $250 to $400 flushes despite manufacturer warning it can void warranty. Industry consensus: if a major Japanese automaker fails in the next recession, Mazda is the most likely candidate due to smaller scale, limited diversity, no truck presence, and vulnerability to market contraction. Mazda bankruptcy would devastate resale values overnight, similar to Suzuki's 2012 exit. While Mazda faces slow strangulation, the next brand is already a zombie. Brand number 9, Mitsubishi, the forgotten brand. Already dead, most people assume any Japanese brand with US presence maintains viability based on market share and dealer networks, but here's the reality. Mitsubishi has only 300 dealers nationwide compared to Toyota's 1,200. 2024 sales hit approximately 102,000 vehicles, with Outlander representing 60%. This is a single product company. In 2000, Mitsubishi competed with Toyota, Honda, and Nissan. In 2025, it's a forgotten brand with minimal presence and no technological leadership. Here's what matters for owners. With only 300 dealers, parts become scarce. Brand uncertainty suppresses resale values. A 2020 Outlander depreciates 15 to 20% more than equivalent Honda CR-V or Toyota Ray V4. The maintenance issue: Mitsubishi markets CVT as lifetime fluid. Reality: CVT failures at 80,000 to 100,000 miles. Outlander CVT replacements at 4,500 to 6,000 become common at 90,000 to 110,000 miles. The solution: CVT fluid replacement every 30,000 to 40,000 miles, costs $250 to $350. Following lifetime claim, costs $5,500 replacement. Preventive changes cost $900. You save $4,600. Most likely outcome: Mitsubishi exits US market like Suzuki in 2012. And speaking of companies that should have exited, our final brand sells literal vaporware. Brand number 10, Canoo, the company selling promises and delivering nothing. You've probably seen Canoo's radical skateboard EV platform designs with innovative lifestyle vehicles and government contracts. The 2025 reality: actual production is minimal to none. Actual sales are nearly zero. Revenue comes only from government contracts insufficient to sustain business. Cash burn rate is unsustainable. Here's the pattern every failed EV startup follows: raise billions on concepts, secure government contracts, produce tiny quantities at massive losses, burn through capital, announce production delays repeatedly, fire workforce in waves, file bankruptcy. Canoo sits between workforce reductions and imminent bankruptcy. The customer warning: if you have a Canoo pre-order, your deposit faces extreme risk. If you own a Canoo, you own the world's rarest orphan vehicle with no parts, no service, no software updates after bankruptcy, and essentially zero resale value. For investors, EV startup stocks are lottery tickets. 95% plus go to zero. For customers, never buy from EV startups until they've delivered 50,000 units profitably for 2+ consecutive years. Building vehicles requires massive scale for profitability. Slick marketing doesn't change economics. Here's the bottom line: what you've learned connects corporate bankruptcy directly to the lies in your owner's manual. Nissan's $277 million in CVT settlements, Stellantis' 610,000 vehicle recalls, Fisker's complete collapse, they all share one thread: companies prioritizing short-term profit over customer trust. And here's what this means for you: that lifetime transmission fluid is destroying transmissions at 80,000 miles, while the manufacturer who built it says, change it at 50,000. That sealed for life differential is failing at 100,000, while preventive $150 services would save you 3,000. The brands going bankrupt deserve to fail because they've been lying to you about maintenance to hide engineering shortcuts. Hit like if you found this useful and subscribe now. I'll continue guiding you through the real facts of car maintenance, saving you thousands. Trust the engineering, not the marketing. When brands prioritize CAFE standards over your engine's survival, you pay the price. Stay smart out there.